All right. Hey, everyone. Welcome back to my stream. So, yesterday I was not able to publish my TradingView article. So, I know for those of you that always wait for it, sorry about that. Wasn't able to write it, but it's okay because I can update you guys on my Bitcoin analysis right here in real time anyway. Plus, there wasn't really a whole lot to write about, to be honest. So anyway, we'll get into that. All right. So, if you're new to the stream, welcome. Here's what we're going to do. So first, as you know, I'm going to run through the economic calendar, make sure we know what events are going on this week so that you know what to trade around and be aware of. Second, we're going to run through the charts. Okay, so we're going to look at Bitcoin, we're going to look at Nasdaq, we're going to look at gold and oil. If you have a chart you'd like to see, hey Hussein, good to see you. If there's a chart you'd like to see, put it in the chat and I'll take a few minutes and we'll take a look at your chart as well. All right, it could be anything. It doesn't matter what it is. It could be a stock, coin, whatever. So feel free to put that in the chat. And then we'll see if there are any Trade Scanner Pro signals on some of these charts. I'll probably just do that as we're going along anyway. And that's it. All right, and I'll answer questions. So I'll try to keep this at an hour. All right, so let's get this thing started. Let's begin with the economic calendar first. Now, as you know, this is the third week of August. Okay, this is significant because, as you guys know, throughout the entire year, I tell people that weeks 3 and 4 of August are the absolute worst weeks in terms of being a day trader because of the low volume. Okay, this is the lowest volume week, right? Weeks 3 and weeks 4 are the absolute lowest volume. So if you're going to take time off, this is the best time to take off. All right, so crude oil, sure. All right, Hussein, thanks for putting that in the chat. No problem. We'll get to that. So now let's get to the economic calendar. There's only a couple of things worth mentioning. The first one is tomorrow, Bank of New Zealand has their rate announcement. I mentioned it because it's a central bank event, but it's not a global market mover. So I just thought it was worth mentioning because it was a central bank action and that was it. So that's Bank of New Zealand. On Wednesday, we have FOMC meeting minutes. That's usually at 2 p.m. Eastern time. The reason why this report is important is because even though we know about all the FOMC meetings and the conferences and this and that, if there was something missed or a little detail that comes out in the minutes, especially in light of the sensitivity of these meetings these days, it can move the market, especially intraday. So you want to be aware of that. Also, on Wednesday, we have the beginning of the Jackson Hole Symposium. Now, if you don't know what the Jackson Hole Symposium is, it's basically where all the central banks, it's a convention in Jackson Hole, Wyoming, where it's a ski resort, actually. And all these central bankers and economists and anyone else who pretends to know anything about anything goes to this event and they listen to a lot of boring speeches. You can only imagine how exciting this event is. I mean, it's a central banker convention. I suspect it's just an excuse to get away from their wives if they're married. But I mean, really, right? They're going to a ski resort in Wyoming. So obviously, it's a mountain of some kind. And they're going to talk about economic policy, central banking, and interest rates. I mean, they should have done it in Vegas. Vegas needs the business right now. They would have bet that they should have done it in Vegas. At least it would have been a little more exciting. You know, can you imagine going to a party or like an after party for one of these things? I bet you there are no hot girls going to the Jackson Hole Symposium. But actually, these days, you know what? You never know. These days, actually, I wouldn't be too surprised because obviously everyone that goes there is rich. So there may be some hot girls there. Anyway, all right. So that's enough about the Jackson Hole Symposium. That begins on Wednesday and it goes until Friday. At least, I may even go to Saturday. I don't know. But I know it's Wednesday, Thursday, Friday for sure. And Chairman Powell, he's the headliner. He's the rock star. So if anyone's getting laid, it's him. He speaks on Friday. I forget what time it was, but he has a speech. I forget the timestamp. I don't know what the timestamp is, but so that can move markets if he says anything surprising, right? As you know, but Chairman Powell, it isn't really like to surprise people. He pretty keeps it like pretty unsurprising if you listen to his speeches. Now, so here's the thing. Why do you think they have the Jackson Hole Symposium on the third week of August? Because it's the slowest week. I mean, that's just my speculation. I'm guessing. They do it every year at this time. And I think that's a heads up that if you're going to take time off, it's a good time to take off. When the central bankers go away to talk about nothing all day long, it means the markets are, chances are the market's going to be extremely slow. Okay, this is particularly important for day traders. So if you're looking to day trade, paper trade this week. Don't even bother. Do something else. Do something fun. Go to the beach. Something. Don't paper. Don't even look at these markets. Next week also, even though there's no Jackson Hole Symposium next week, it's still the fourth week of August. It's probably the bottom of volume. Now, again, this is a gradual process. The volume will start to incrementally increase from here on until about November. So when we reach November, we'll probably be more to a more voluminous and wider range intraday type of environment, which is more ideal for being a day trader, especially in something like the Nasdaq. Okay, so that's the economic calendar. Let me know if you have any questions about that. Again, it's not a whole lot, all right? Let's talk about charts, shall we? So again, I never sent out an analysis yesterday. Like I said, there wasn't a whole lot to talk about. Let's talk about Bitcoin now, and let's talk about what's changed. Now, here's the thing. As we can see here, right, over the previous 2 weeks, I wrote this analysis 2 weeks ago, basically calling a long at 113, right? Now, we got the long. The long played out. This was my illustration, my suspected move, as we can call it. Again, it's a guess because that's one move out of countless possibilities, right? But I use historical cues, historical data, and I use context and what I know of price action to basically arrive at what I believe is the higher probability outcome, near-term outcome. So that's how I come up with this illustration, right? So the market followed part of it, but then the market turned. Now, so this is interesting. I suspected we'd at least test the 130 area, and I was going to call this wave 5 of 5 of 5. That's what this is in terms of the wave count. That's why I have this little wave 5 thing up here, right? Which basically is the conclusion of a gigantic super cycle wave 1 of Bitcoin, going back basically to the bottom, right? To the beginning of Bitcoin, basically, that's the magnitude I'm talking about here. Now, this structure right here has made a higher high. This high right here is 124 whatever. That's higher than the 123 previous high, right? This 123 previous high that was established back here in, what was that? July, whatever, third week of July, whatever, fourth week, no, the second week of July, right? That high was made. We made a higher high, but not by much. So technically, we can argue that this is the fifth wave, right? And I can actually count 5 little subwaves inside of this little mini structure here that I have highlighted. So that could be it. That's possible that the party is over. And now we're just going to see a broad corrective move for the next few months, or this could be the beginning of the broad wave too. Now, arguments against that idea is this pullback is very small and muted. Like, this is not a real pullback. This is just a little tiny, this is nothing, right? Relatively speaking. If this was the A wave of like a broad wave 2, this would probably be more dramatic, in my opinion, right? Like, we would be breaking supports. We haven't broken any supports at all on this pullback, first of all. So it's very possible that this entire structure is still a wave 4. That is possible because of the failed high. When I wrote about this possibility 2 weeks ago, when I wrote about this, I specifically said If we break out, but like the next candle is red, it's most likely a fake out. It's exactly what we got. So anyone that was following that analysis should have at least been prepared. They should have at least have known what to look for instead of sitting there confused. Oh, what happened? Michael Saylor said it was going higher, right? But when you see that red candle, that's it. You get out, take the loss. That's it. It's not going higher. If you stay in this thing, you're taking enormous risk, right? So short-term risk, again, 113 is the bottom of this structure, right? So, and right now we're developing a bullish pin bar. It's trying to develop a bullish pin bar. It's not really doing a whole lot. So again, and we're going into the quietest 2 weeks of the month. So unless we blow through this 113, I'm going to suspect that this is a wave 4. We're still in wave 4, and we don't have the catalyst for the wave 5 completion yet, right? So this bullish movement, while I can count 5 waves in that, it still may be just part of wave 4. Because if wave 4 is a compound corrective move, it's very possible when you're having like A, B, C waves or whatever, you have A and C waves in there, and A and C waves can be 5-wave structures. They can be impulse waves. I know it's confusing. That's why people don't like to do wave counts, and that's why I recommend not getting caught up really small into the small wave counts, because it's confusing and it's pointless. Look at the bigger picture. So wave counts aside, basically we can argue that this is a consolidation, and in order to really see a change, especially a bearish change, to say, okay, this thing is probably in the broader wave 2, we need to break support levels, right? That's the conclusion here. We need to break 113 is your first support. We need to clear that. We need to be testing 108. Okay, 108 is the wave 1, right? That's the wave 1 of the 5, right? So if we test that, then that means this impulse is over. It's no longer an impulse. And then most likely in that scenario, this was the wave 5. If we blow through that wave 1, right? If we overlap it, I would then think of this as this is probably the wave 5 completion, and we're looking at a corrective wave, right? A corrective wave 2, which, by the way, can reasonably play out to 85K. 85, 70K, that's about a 38% retracement area, something 382, whatever, like that area. So that's very within reason for a broad wave 2. Technically, wave 2s can retrace 100%, but that doesn't mean they will. So somewhere between 50% and 382, I think, is a reasonable area for Bitcoin. And that's, you're looking at like 65K to 85K, that area. That would be a great investing area if it can test that. Now, remember, with my forecasts, I don't speak in absolutes. I have no idea if Bitcoin can pull back that far. All I'm saying is, if this is a wave 2 structure, a broad one, it's within reason. Of course, to get that type of retracement, there needs to be a series of bearish catalysts. We don't have any yet. Okay, so this pullback so far, in fact, I don't even know what the reason is for this right here. I don't even know the reason. Okay, there's probably some reason in the news or whatever. I don't know what that is. But, Ethereum also got hammered. And I warned people about Ethereum. We talked about the wave 5 in Ethereum, right? Hussein, how'd you make out with that Litecoin? With that Ethereum pullback, I would imagine your Litecoin short worked out. Am I right? Remember we talked that you shorted Litecoin, you took a little pain. And I said, hey, it's not that bad of an idea. So anyway, so that's what you got to watch for. So these 2 weeks, unless something specific comes out, I wouldn't worry too much about this movement. Now, if you're looking to buy the pullback, oh, nice. Okay, cool. So you made profit on that one, right? I would imagine you made profit on that. With that Ethereum pullback was the key for you. So, if you're interested in Bitcoin and you're interested in a coin, right, that follows, that's highly correlated to Bitcoin, and you're looking to buy this pullback, okay, but keep it reasonable, right? Swing trade. This is not an investment level by any means. It's still high risk. Okay. All right. Hey, at least it's green, Hussein. Nothing wrong with green. Nothing wrong with that. So I would say if you mess around the 113 level again, something like that, or even if this turns into a pin bar and you're interested in a swing trade long, that's reasonable. But my expectations would be low. This is not like the pullback. Oh, by the pullback, hey, it's going to go to 200K from here. No, that's a bad expectation to have. Okay. Okay. Well, all right, Hussein. Yeah. Well, so I mean, after this speech about this wave two, actually, now this thing is basically beginning to be in the party is over zone. Maybe we get the wave five continuation, but if we don't and we break these supports, then all of these things are going to be shorts. Okay. They're all going to be shorts. So just something to keep in mind. But so what I'm saying here is if you're interested in the long, because so far we don't have any support breaks, the trend is clearly bullish. This may be a pullback to buy, but I would characterize this as a low expectation pullback, meaning maybe you get a test of the high, look for some type of reasonable reward relative to your risk. If you can get 1.5 to 1, this is not, go all in and think this thing's going to 150. Anything is possible, but be careful on this pullback. That's the key takeaway from this. This is a likely pullback that's going to break because we have this failed high and it's possibly a wave five completion, right? And the wave five that I'm talking about basically is this entire structure right here. You can count 5 waves in that. So that's why you have to be careful of that. All right. If this thing holds 113 and works its way back up toward the high, then this is probably still the wave 4 consolidation, and wave 5 still has some room, right, which could take it up here, maybe higher. But again, the catalyst is key. I don't know what kind of bullish catalyst or what kind of bearish catalyst can move this market, or a series of catalysts that can get this thing going. All right. So just something to keep in mind and to be aware of. All right. So that's it on Bitcoin. Let me know if you have any questions. Now, I talk about Bitcoin a lot. You're interested in oil now. Okay, no problem. Oil is an active market. There's a lot going on with oil. So you can use this Bitcoin analysis and apply it to other coins that are highly correlated to Bitcoin, because the story is going to be very similar. The structures are going to be very similar. Not all coins are correlated to Bitcoin, but many of the big names are. Okay. So, like Litecoin, they're not 100% correlated, but basically, if Bitcoin has a big move, that altcoin is generally going to move in a similar way. All right. So you can use kind of Bitcoin for your cues, or sort of like the S&P against a stock. All right. So that's Bitcoin. Let me know if you have any questions about that. Let's move along now. So Hussein, I'll get to oil in a moment. Let's jump over to let's look at the S&P real quick. All right. So we'll go to, and if anyone wants to see Ethereum, let me know. But it's going to be very similar to Bitcoin, right? The story is going to be very similar. So we'll go to ES1. Well, actually, we could look at SPY. All right. We could look at the ETF. So this thing, since April has just been in ridiculous mode, right? We barely get pullbacks. This is the daily time frame. Now we've been getting, as you can see, we've been getting a little heavy up here, but we're hardly moving. I mean, this is hardly a pullback. This is going to suck in a lot of shorts, by the way, because it's an obvious place to get short. It's also a failed high, right? It's a failed high location. Look at this, right? Relative to this. That's a clear place for resistance, and we're seeing some resistance, but we don't see anything dramatic here. And this week happens to be the slowest week of the year, right? So what's if there's going to be a sell-off here, what's going to be the catalyst? The FOMC meeting minutes, Jackson Hole symposium, maybe some surprise news can always come out, but so what I'm saying here is certainly this is not, we're not talking about day trades here. We're talking about swing trades now. This is not a place to be buying. This is not a pullback to buy for swing trades. it is a short possibility, especially if you're using options. But the thing is, you're dealing with very slow, it's a very slow situation. So, again, you might be better off waiting for a clearer signal or greater volume, because what do we have here? Let's just look at these candles, right? We have this pin bar situation, right? These are bearish candles, but we're not breaking the lows, right? So you can go to Thursday's low over here, right? You could kind of use this as your range and kind of work with that, right? And so far, as you can see, we haven't broken that low part of the range, and we have a pin bar there developing. So this market's not really that weak, right? It's not really, or it's a doji. It's not really that weak. Is that an inside bar? No, this little candle is not an inside bar. All right. So again, don't make the mistake of getting short too early. This can easily also turn into a higher low. You have a support right here on the S&P, right? And if you look at Thursday's price action, right, this candle, look at the low. Interesting, right? So that's not a coincidence that it corresponds with this previous high. So that's the level that's in play on the SPY, right? So 641 and a half, basically. Right now we're at 643 and a quarter. So it's got some room to pull back. Just don't be fooled. If this thing goes into that 641 and a half and it finds support, that's a place to go long, at least briefly. There could be some good day trade opportunities there. There can be some swing trade opportunities there. Something like that, you can open up like a bull put spread, where you short the higher put and you buy the lower put, and you take advantage of the time value as it pushes away from that support. That's one possibility. Going long calls is usually a bad idea, unless you're expecting like a big move. And especially in this environment where it's moving a lot slower, you're better off doing a premium selling strategy, like a bull put spread, right? Rather than a premium buying strategy, like a straight up call, right? Make sense? So, all right. Hey, Ricky, how are you? Ricky, the South African guy who's in England. Here, dear. From England. Welcome to England. All right, that's my English accent, in case you haven't noticed. All right, so that's the S&P. Let me know if you have questions. Okay, so since Hussein has been very patient here, let's get into oil. All right. Oh, UTXO. I'm opening up a bull put spread on IBIT as we speak. Oh, nice. Okay. IBIT, that's the Bitcoin one, the Bitcoin ETF. So you're doing a bull put spread. Okay. Okay. So we just looked at Bitcoin. So you're betting on that bottom there that it bounces up a bit. All right. That's not that makes sense. Okay. Oh, you like it. Oh, dear. You see that? So there's a guy in England, in the UK, who approves of my British accent. Now that makes me feel really good. All right, cool. So that accent is accurate. All right, I got to work on my other ones. See, I can get away with the British accent without really pissing a lot of people off. But if I do some of my other ones, people are going to call me racist. So anyway, but see, you can pick on the British people. They're okay. You're not racist if you pick on them. So anyway, let's take a look at oil. All right, so we'll go to CL1. All right, my less politically correct stream. I was thinking about doing a really controversial stream, but I'm probably not going to do it. Not a stream. I was going to do a video. That'll probably get me a lot of views, but it's just, it would not be in line with my channel. So anyway, you have to do controversial stuff. That's what gets attention. You got to do controversial stuff, but you have to be careful how far you go. So let's talk about crude oil here for Hussein. So this is the daily time frame. Now, when we've talked about this before, the wave count is like all over the place on this, right? So I think this wave count is basically the impulse has been canceled out, I believe, because we have a wave 1, 2, and 3, and we were calling this a wave 4. But this is this is clearly an overlap, right? If we're calling this wave 1 over here, this initial push right here, if that's our wave 1, I mean, the overlap is crystal clear, right? That's clearly overlapped. So what that tells us is that this is not an impulse anymore. It tells us that this is a range, right? This is most likely a consolidation. Okay, cool. So that means it can go either way. All right. Now, in a range, we still want to be very aware of support and resistance levels to think about what we want to do. So Hussein, what were you thinking about with oil? Buying it or selling it? What were you thinking about? So let's look at our support levels. So we have a support level right here at 59.74. Are you looking at the crude oil futures or are you looking at like an ETF? What are you looking at exactly? Or it could be a CFD. You want to sell it, okay? And what are you thinking about? CFD? Are you thinking about an ETF? Or are you thinking about the futures? Which one are you thinking about? Because I mean, everything that I'm showing you here, you can use, but it might be easier if I just show you the instrument that you're interested in. So we have a resistance right here. So you have a support here at 59.74. You could round that to 60, right? And then you have a resistance at 64. You could say 64 and a quarter, right? That's your near-term support and resistance on crude oil. That's pretty clear, and it's reacted there. Futures, okay, all right. So then this is perfect for you then. So you can see it touched it over here, right? So this is a relevant level. Look how much it's touched it. It's touched it numerous times, right? So that's a relevant level. It should have been a support and it broke. Okay, no problem. Now, remember, with oil, you have to be careful with oil because of its geopolitical sensitivity. I mean, so technical analysis has limitations when it comes to oil because one little thing, oil is extremely sensitive, right? And the chart formation can mean nothing in an instant. So just keep that in mind with oil. Now, so you're thinking about selling it. All right. So in that case, here's the thing. Your nearest support. So look, we just talked about that $60 support, but look, just pay attention to what's happening here. Remember, this is a daily time frame, right? So pay attention to this situation. You're thinking short, but you have a failed low in progress. You see that? So that usually provokes shorts and then gets you caught in this thing. So and look at this candle. So first you have the failed low region, which is this area right here. You've established the pin bar. I believe this market's closed now. Is this thing closed? I think this is the crude oil futures on my chart are delayed, but still this is the daily time frame, so it's gonna be okay. But I believe I forget what time they close. Anyway, most likely the candle is going to close like this, right? So this is a bullish formation. And if you break this high, this daily high tomorrow, which is 63.01, nice whole number, that's going to be a long signal, right? On this time frame for a swing trade anyway. So be careful of that. If you're interested in shorts, Hussein, now I don't know what time frame you're thinking about, but if you're looking at day trades, then you want to pay very close attention to this daily high and low, right? You want to pay very close attention to these levels because those can coincide with day trade opportunities. If you're thinking of swing trades, then your next resistance, you're going to have to wait for this level up here, which is what, that 63 level? No, the 64 level, right? This is where you want to find swing trades, up in here somewhere. It may not make it that high, but it may get somewhere close by. Like ideally, it may get somewhere inside of here. Okay, that's your range where you want to look for shorts. And you can use, again, it depends on what time frame you're looking to trade. If you're looking for a swing trade and you want to get in a little sooner than when the daily time frame gives you a signal, then you could use something like a 30-minute chart, a 1 hour chart. But you want to use the daily range. You want to pay very close attention to this area here, okay? Because you're nearing that resistance and you're inside of this candle, right? You're inside of these candles. So there's some action in there. Like, so for example, look at the high from back here, right? In fact, there's a name for this. I hate to use this name, but this is typically what this is called, the fair value gap, actually, right? I think it's this high. It would be this high to, is there a fair value gap in here? No, actually, no, there isn't one. There'd have to be like this would be like a fair value gap from like this high right here to like this low. of this candle, right? That's what that would be if they were next to each other. But you don't have that here, right? We'd have to look at basically this high relative to something. There's nothing there. So never mind that I said that. But this high is still relevant, okay? This previous high back here is still relevant. So you want to pay attention to that. And you want to pay attention to this zone for shorts. If you're thinking of swing trades, are you thinking of a swing trade or are you thinking for a day trade? Because again, if it's day trades, then you may get an opportunity sooner. But of course, you're getting out sooner as well. Because for day trades, you may still be able to fool around inside of this range right here, today's range, but tomorrow, right? Like if you can't break today's high, then it's likely to go back inside the range a bit. And those could be mean reversion opportunities, right? For day trades. So that's why it's important to know the time frame that you're looking to work on, because your parameters are going to be relative to that time frame. Day trade. Oh, okay. So then forget everything that I said about this range up here, because I mean, unless you get up there, that can offer day trade opportunities inside of there. But if you're interested in a day trade, Hussein, and you're thinking about shorts, then you're going to want to pay attention to today's range. And you're going to want to pay attention to the high of today's range tomorrow. Okay. And if we test that and we fail, that's an opportunity to take some money out of that. Okay. Sure, Ricky. Oh, dear. Of course, Ricky. Of course, I can look at that in my British accent. Okay. So cool. All right. So you got that, Hussein, on crude oil. Does that make sense to you? So pay attention to the high and low of today and use that as your reference for tomorrow, particularly today's high. All right, cool. And if you could use, now that's where something like the Trade Scanner Pro could come in useful, where you test the high and then you come off of it, and then you could have the Trade Scanner Pro aligned with that, and then look for sell signals, right? I mean, I'm just curious. Let's just see how the Trade Scanner Pro, I'm going to go to a 5-minute chart on crude oil. I'm going to turn the Trade Scanner Pro on over here. Now, by the way, if you're new, I know Hussein, you've seen this a million times, but if you're new and you're like, oh, it's a Trade Scanner Pro, I would not recommend. Oh, look, a signal popped up as we spoke. I would not recommend it for someone who's new because it's not intuitive. Okay, and I have a bunch of videos on my channel where I have lots of demonstrations. But if you're not willing to watch those, then you're not going to get anywhere with this. I'm just letting you know up front. I know I'm not a very good salesman for my software. So this thing's actually calling along, right? Now, let's just look at the levels here real quick. So this is the daily high that I was referring to, right? And you want to pay attention to that for tomorrow. So right now, the Trade Scanner Pro is actually, it's in long mode, okay? It's in long mode. See that? It's looking for longs. So if you were using a tool like this, you'd have to wait until this thing touched, failed, right? If you want it to be more conservative, and then wait for this thing to turn around and give you bearish signals, kind of like back here. It would look like this, okay? But at a level. It would come off the level, right? So you're aligning the level with the signal, not the signal by itself or the signal near the level. Now, if you want to be more aggressive, of course, you can go into counter trend mode. So I'm not going to get into all that. The easier thing to do is just stay in trend mode and let the momentum line up and wait for signals on the side that you're anticipating, the side that you're trying to work on. That's the easiest thing to do, but it requires patience. Okay, so let's go back and, all right, so I'm going to get to TSLA in a minute. But let me just first, what is this? Oh, this is on the bigger picture. Let's see, what does the bigger picture say? Oh, look, the bigger picture Hussein called a short a while ago. Oh, on this candle. That would have been a tough candle to get short on. And that was months ago. June, that was back in June. That trade is still in play. Interesting. All right, so before I go over to the stock, let's take a quick look at, we got oil. Let's just do gold real quick, and then I'll go to the stock, okay? Actually, yeah, let's do gold. Also, I'd like to cover the bond market. That's something that you should pay very close attention to. Even if it's not really moving a whole lot, you want to pay attention. All right, so gold, right? So gold hasn't changed much. It's still inside of this tight range, right? There's a long signal that's present in gold, but it's pulled back, right? Now, guys, remember, I have that entry method where you look exactly for this, a pullback into your risk zone or the risk gap. You look for a pullback into there, and you look for some type of reversal off of this rather than taking the entry itself, right? Essentially, you're using the Trade Scanner Pro as a heads up rather than a signal. And then you're looking for candlestick formations after this heads up and looking for longs in there. It's lower risk because your risk is defined here, right? So for example, a long signal in gold would be if we can go back above that blue line. In this case, it just coincides with this lower high right here. So you're breaking above that lower high or this candle high, right? You just break that, you get a nice strong green candle. You get something that looks like this. That would be a long signal, okay? And your stop can be placed here. That's the ideal stop. Or, I mean, you want to put your stop a little tighter, you can, but your chances, of course, of getting stopped out are going to be greater. All right. So there's not much to say about gold otherwise. Is gold still generally bullish? Well, fundamentals support the idea, right? We're going to go into quantitative easing soon. We're expecting a lot of heavy rate cuts and all the other kind of stuff. Those should be bullish factors for gold, right? Unless some sort of catalyst comes along and changes. But for gold to really start saying, okay, gold is in pullback mode, you need to break like a major support, right? And that support right now is 31.20. You could just say 31 even, right? This thing breaks 31 even, then it might be a good idea to just hold off on gold and let it stabilize. But right now, buying pullbacks into this 32.68 or 32.50 area is still a reasonable strategy, in my opinion. All right. It still makes sense. All right. That's gold. Great for options, by the way. Right. Great levels for options, the vertical spreads. All right. Let me do the bond market real quick. I'm not going to spend a lot of time on the bond market because there's not much to say about it, but we just should keep an eye on this every week. Okay. So this is the 10-year note futures. It's inverse to yields. And we're still inside this range, right? Look at this. We've been in this range for a long time. Look at this. So as bond prices, if they continue to rise, then that means yields are pulling back. But if bond prices pull back, that means yields are going higher. This market has just been very stagnant and just doesn't go anywhere, right? So again, if this rises, that means interest rates are going lower, and that's what people are expecting. That's what's being priced in and all that other stuff. And that's also inflationary, right? But everyone's happy with that. That's good for the banks. The stock market everyone should like that, right? Those are all positives short term. If this thing works its way back to the lows and starts breaking these supports, then that means rising rates, bad for banks, bad for everyone. That's bearish for the stocks, bearish for everything generally. So we're nearer the top of the range. This is just inside of a range. It can easily form a higher low. There's no trend here. So I would suspect with all the plans of rate cutting and all the other monetary easing stuff, the easy policy stuff, I would suspect that this thing is probably going to work its way higher. Okay, just based on those fundamental ideas. Now, of course, something can change, and if something changes, again, that's why we pay attention to charts, because if certain levels change, that's usually a reflection of fundamentals. And sometimes it's a reflection of fundamentals before we even find out what those fundamentals are. Okay? All right. So that's it with that. 30 minutes. Oh, you want to see 30 minutes on oil? You could use that. I'll jump back to oil real quick. If that's what you're talking about, Hussein. 30-minute. Here's a 30-minute on oil. So, I mean, all right, so if you're looking for a short here, that I can see what you're looking for. But, all right, so here's the thing. For one, I would wait until tomorrow, obviously. You could use this, well, this 30-minute high, that's your daily high right there, right? You also have some 30-minute highs over here. You can use those as resistance levels, right? Just watch out for these support levels. You have a support level here. Just watch out for that. Right? You don't want to short into those, especially in front of this pin bar. You don't want to short into those, or I mean, you can, but you're taking higher risk, right? Especially if you like, remember this candle was a full candle at one point. So, you short into like a full candle and then it turns into this, you're caught. Most likely you're caught, right? So just keep that in mind. Look at this area right here for your selling opportunity, right? Wait for some kind of bearish situation. Look at this situation back here. This is ideal right here. Look at this. You have the failed high, right? You had a high, failed high, and then you have a Trade Scanner Pro signal right there at the failed high. You had a heads up, right? The red bar is a heads up, and then it gave you the signal. See that? That's ideal if you can get something like that. So again, these patterns don't appear, they appear regularly, but not when you want them to. So if you can get all that lined up, maybe you may have to find it on another time frame. You may find something like this on a 5-minute, for example. Makes sense? So yeah, these they look great after the fact, but they're hard to, they have to be very patient. I mean, what time was this signal? 6 a.m. So, I mean, I'm not watching charts at 6 a.m. Anyway, all right. So let's move along here. All right, no problem. No problem. I'm saying, well, I mean, you're here. I appreciate you here. You're watching. I might as well make this valuable for you. All right. So we went over the bond market. Let's go over TSLA for Ricky. Irdia. Okay, Ricky, I'm going to do this analysis in my British accent. I'm joking. I'm not going to do that. I'm not going to sit here and pretend to be British for 10 minutes. Okay. So let's start with the weekly chart here first. Now, I always see I always see negative stuff about this. People I always see like negative things said about this. And look at this. This doesn't really look that negative to me. All right. Now, keep in mind this is a big component of like the S&P, Nasdaq, right? I believe it's a member of the S&P. So with S&P strong, I mean, this is going to help the S&P be strong. But let's just look at some of the patterns here. What's going on? I mean, first of all, so you had this pullback back here. You have this, it's a consolidation. Clearly, this is some type of consolidation, some type of triangle, right, on the weekly. It's hard to say really like short term. I can make bullish arguments for this, Ricky. I mean, first of all, look at this, right? You have this trend line, which is intact, right? You have a counter trend line. Basically, you can draw a counter trend line. Whoop, that's not what I want. You could draw a counter trend line here, like this. The counter trend line is the one that's likely to break, right? So you could use that as a reference. Trend lines are good for this purpose because they project prices into the future. So they put you in more of an anticipatory position rather than looking backwards all the time with something like an oscillator. So you have this high here, 348.98. So 349, you can even round out to 350. This thing pushes 350 and closes, or that, if it's doing something like that, then you're breaking that counter trend line, right? And most likely making an attempt to test this high over here, which is what? 367, right? That's a nice little move. Now, so I don't know what you're thinking, if you're thinking swing trade or day trade, but I mean, even that from 350 to 367, that's like a decent little swing trade right there, right? That may take a couple of days. The Trade Scanner Pro is long. Look at that. The Trade Scanner Pro called this thing long back here on July 2nd. Wow. That was over a month ago. Called it long on this candle here. Now look at this. So again, this is why I say use the Trade Scanner Pro as a heads up, not to take the signal. This thing called the signal long right up here. Look at all the next day it gapped, or 2 days, this thing's gapped lower, right? Look, and it never went to the stop, but it spent plenty of time inside of this risk gap and offered much better opportunities to get involved, way better, much lower risk opportunities. Because if you bought like on this pin bar or maybe on this breakout area right here, your risk is way lower than the initial risk, right? Let's just say you bought it around here and your risk is like 16 points compared to 36 points, or yeah, right? That's like half the risk. something like that, right? So that's why I encourage people to use it that way. Don't be impatient and just buy it just because you're at the blue line. You can also wait for a recross of the blue line, but then you're taking the full risk, right? And look, this thing's been fluctuating around and it's starting to work its way higher. So you have all that going for you. I have an order to sell short at 340, looking for a pullback to 315. Oh, okay, so good. That's good. So I guess that would be a swing trade, 340 to 315. All right, so that gives us a little more. That helps me give you some perspective. Then, yes, it's risky because you're fighting something that's generally strong. Okay, overall, I'm bullish. Okay. So you know what you're doing. Like you understand what you're dealing with. So 340. All right. Now we can go to an hourly chart for this. See, with stocks, since they only trade 8 hours a day, basically, an hourly chart is appropriate for swing trades rather than a 4 hour chart. Just gives us a little more detail, right? Now, so this thing is giving us this bullish situation right now. You're looking to short 340. So, all right, I could see why you're looking at the lower highs, right, on this time frame. And you said you're trying to cover 315. I think you said. So where let's just put those levels on the chart. So right now this thing's at 330, 334. So the high of this thing was 336. So you're looking at 340, which is up here. I see. So you're looking at the failed high. Okay. That if you're going to short it, that's a place. That's certainly a place. And then you're looking for 315, which is 315 is here. Yeah, it's a little 315 is a little optimistic. So, all right, so these are your levels, right? These are the levels you're thinking about. Shorting up here, and then you're looking for this thing to go to here. Now, it's a little optimistic. What I would say is, for one, there's a broader long signal in play. So if that's the situation, yeah, you're right in waiting for a better price, and it still has the opportunity to test that price. So I wouldn't be in a hurry to short this. If you like short this now, based on what's happening here, which is not an outside bar yet, is the market closed? No, but I doubt this is going to close as an outside bar. It's giving you a possible selling signal here. Okay. Here's an example of a fair value gap, by the way. ICT, I hate talking about it because ICT people, they jerk off to this stuff. They love fair value gap, fair value gap, right? But that is a fair value gap, which can act as a support or resistance level. And coincidentally, you have this selling activity that's happening inside of the fair value gap. You just Google fair value gap, it'll give you the definition. But basically, what it is, it's a high of one candle, like here, like this pin bar, and then it's compared to the low of two candles back, which is this candle over here. And the area in between is what they call a fair value gap. So again, I don't use these, but that you can find these all over your charts, and sometimes they can give you a heads up. I think. I mean, they're interesting, but I don't go nuts over them because they can also be very random, right? But anyway, so what I was going to say about this idea is, instead of 315, which I think is a little aggressive, especially in something that's generally bullish, you might want to estimate your profit objective sooner, right? Just to increase the probability, like maybe something like this, right? Which is what is that? 325. So maybe 10 points higher, or maybe you take some off there and then see if you could ride to 315 if it gives you that opportunity. Because again, you're fighting something that's generally strong. So when you're fighting something generally strong, it's the pullback is not likely to reach those aggressive lows, right? That's you're looking for a much lower low. And in something that's generally strong, you're better off looking for the low of the structure or even the halfway point. Because remember, people are itching to buy this thing, right? So any excuse to buy this thing, they're going to buy it, right? So keep that in mind. Plus, when you're dealing with a stock like this, the bottom of the lower trend line, okay. Oh, I see. Okay. So the lower trend line, were you were you doing something like this? Let's see. Were you, I guess you were looking at something like this? The bottom of, were you looking at a trend line? Were you measuring those lows and basically seeing a channel? Is that what you were doing? Like we could draw like a channel, right? From 315. 315 is like over here, right? So like basically like a channel, right? Something like this. Is that what you were doing? Something like that? And you were looking for 340, something like that? So on the daily time frame. Oh, okay, okay, okay. All right, well, all right, that I understand that. Okay, just understand, right? Just because you could fit it into a channel, all that stuff, just understand you're still fighting something that's generally strong, and also this is a market stock, right? So to get this to go your way, you need some heavy selling in the S&P, right? And the S&P is still in ridiculous mode, so you're fighting the S&P also. So just keep in mind. So the only suggestion I would make, I mean, look, it's aggressive, yeah, but the only suggestion I would make is just maybe be less optimistic about the profit objective, or just be prepared to get out sooner if this thing gives you a hard time. If it gives you the opportunity to get in short. Now, your short price makes sense to me because it's a failed high, right? You're looking for that, which is sensible. That's a good, if you're going to short it, that's a good place to do it, right? The failed breakout. That is if the breakout fails. Keep in mind, you may get a breakout up there, right? This thing may break out because it's itching to break out. So just keep that in mind. All right, so that's what I'll say about that. Make sense? So, all right, cool. I hope that you found that helpful. Also on the daily time frame, just keep in mind, look what's happening here on the daily time frame. This is it an inside bar? Let's see. We have a low over here, 326.98, 327. Okay, so it's not an inside bar, but it's almost an inside bar, right? So this is it's almost an inside bar. It could act the same way. So we close, if this inside bar or this candle high is broken tomorrow, that 336, if that's broken tomorrow, you're facing a buy signal, right? So just keep that in mind also. You're facing a buy signal. So when you say the daily time frame and you're looking at a bearish channel, I guess you're looking at this over here. Oh, I see. Okay, you're looking at this over here. Okay, that makes sense. I get it. All right, I get it. But understand something. So just a couple of things I could point out about that, Ricky, is this is a higher low formation, right? So you got the higher low, you got the higher high. Theoretically, this formation should make a higher low and a higher high, which may not be in line with what with your scenario. All right. And I would be watching this midpoint area very carefully. I'd be watching this midpoint for a buy signal if this one fails. If this buy signal follows through, I mean, you're looking at, this. Okay. And the Trade Scanner Pro is anticipating a price objective of 374, right? That's all based on the ATR. Just something to keep in mind. All right. So cool. So we went over some details there. All right. It's 4 o'clock. I got a few more minutes to do this. Let's take a look at, I got oil. Anyone else want to see any particular coin or stock or anything? Don't come in. I get people that come in at like 4:15. I'm like, okay, everyone, I'm going to sign off. And then they're like, oh, can I see Coinbase? I'm like, dude, where were you 20 minutes ago, man? All right. So anyway, anyone want to see anything? Okay, cool. All right. I mean, that's the whole idea behind these streams. Like, I want to give value so that I'm giving you the perspective, and you kind of can form expectations based on historical market structure here. Now, look, markets are random, right? And I'll be the first to tell you, markets are random, and all this stuff that I'm saying can just go out the window in 2 seconds. I mean, you can ask ChatGPT, and it can give you a similar analysis, maybe. All right. All right, sure. I'll take a look at coin, but you have to have some sort of perspective. And I've used AI to try to, come up with some of these things. It's decent, but it still misses a lot of things. Okay. It doesn't have the detail yet, or it doesn't have the context yet to get in deeper. right? And see things like for example, we all know that things like the RSI and all that stuff, they're pretty much worthless. But if you ask ChatGPT, it'll tell you otherwise. It'll say, oh, traders use the RSI to confirm blah, blah, blah. And I'm like, this thing reads too much internet. So anyway, all right. Coinbase. Now, so Coinbase obviously is going to be somewhat sensitive to Bitcoin. There was a long signal about a week ago. Notice now it pulled back, or we should just call this a long heads up, right? A long heads up, pulled back. It's giving another buy signal because, like I say, if it goes back above the blue line, you can consider that a buy signal, right? Your risk on this thing is 41 points. That's a lot. It's kind of a lot. And you want to lose 41 points on a stock, but the reward objective is 63 points. Wow. So this candle closes like this, breaks the high. Well, it's closed now. Breaks the high tomorrow. That could be a valid long signal, right? Now, you don't have, if you don't want to use that 43 point stop, you could basically use the candle low if you want and use a tighter stop. Okay. Of course, your chances of stopping out are going to be greater. Instead of using this risk gap as your stop, you could just use it as an area to be looking for longs, right? Especially if it tests this low right here. This would be an ideal place for longs, all right? But this thing looks like it's poised to at least test higher, Maybe if it can't reach this profit objective, notice this profit objective is aligned with this resistance right here, which makes sense. This makes a lot of sense. I see this pattern play out all the time. That makes a lot of sense right there. But a more conservative profit objective would just be this midpoint, right? That would be a much more conservative place to measure your risk from, which might more equate to more of a 1.5 to 1 or 1 to 1 reward risk on something like this. Does that make sense? If you're involved in Coinbase, the general trend is bullish, right? Just like the general trend on Bitcoin hasn't changed either. Interesting for breakout in UK bond yields seems imminent. Oh, okay. We can take a look at that, Kai. No problem. No problem. All right. Link? No, we haven't looked at Link. All right. Looking for an entry point to sell coin if and when BCC. Okay. So, all right. So if you just ask, I always start these things out with Bitcoin. So watch my Bitcoin stuff. Bitcoin is still bullish generally, right? It hasn't broken any major supports. It may be turning, and I talked about the bearish scenario, but it's still early. And plus, like I said too, I emphasized in the beginning of the stream, these next 2 weeks are going to be the slowest of the year typically. So there's probably not going to be any particular economic catalysts to drive these things to where we want them to go or where they think they're going to go. You're probably going to have to wait till next month, right? Or the month after to really start to see things move in a meaningful way. So don't get too provoked, don't get too excited about these things. In fact, I was encouraging people to just take the week off, at least for day trades. Don't even bother. All right. So you said you're looking at an entry point to sell. All right. So Ricky, as far as selling as a day trade or a swing trade, I'm going to assume it's similar to the other trade we just went over. If you're looking for a point to sell, then you need to find resistance levels, right? I would say your first resistance is right around here, which kind of coincides. Looks like there's a little gap in there. And you also have a pin bar in there, right? If you're going to do anything on the short side, right, you would start looking around there, and the range would go up into here because you can always get like a failed high situation. Those are ideal if you get those. Those don't always happen, but they're high probability when they work. Swing trade, okay. So if you're looking for the short, those would be the areas, because right now, shorting it now, even if you use like the daily high and the daily low, I mean, this thing is poised to go long, right? So let the people buy this thing again, and Bitcoin is also trying. So this would be the area up in this zone where I'd be looking, okay? And that coincides with these old supports back here, this old support, which likely would act as a resistance. And you got a rejection right here, the pin bar, right? So you may possibly test higher than the pin bar, which again was the exit for the long that I was just talking about. And there may be a short signal in there. Those would be the places to wait for, okay, if you're going to wait. If you shorted any earlier, you just, in my opinion, you're asking for trouble. All right, so cool. Hope that helps. All right, so good question. All right, so Kai, let's get to Kai over here. Good to see you, Kai. So Kai says, so he's talking about the UK 10, YBGBP. That's the, all right, so the UK bond yields. Kai likes to look at these exotic instruments. Kai is sophisticated. All right, so we could do link. Let's do link first because I think people will be more able to identify with link, and then maybe we can take a look at those British bonds, especially since Ricky is here from the UK. He may identify with the British bonds. All right, so link. Link likes to do its own thing. Let's take a look now. So we saw Bitcoin pulling back, right? We saw Ethereum pulling back, but not Link. All right. So wow, yeah. So I'm looking at the weekly chart here first, and here's the thing with Link: 1, 2, 3, right? Count 3 waves. Actually, no. Hold on. This is wave 1. So that way, yeah, this is the lowest point. So 1, 2. This whole thing is 3. This is not wave 4 right here. This is not wave. I don't think this is wave 4. Is it? Let's see. Well, wave 4 can't be the shortest wave. Let's just measure this real quick. Right? Let's see. Could this be wave 4? Maybe it is. Can't be the shortest wave. No, wave 1 is the shortest wave. All right, so that does qualify as a wave 4. All right, 1, 2, no, 3. I'm sorry, 3. 3 can. I'm sorry. I'm mixing up the words. 3 cannot be the shortest wave. This is not the shortest wave. So that means this wave 4 pullback, but it overlapped wave 1. That's a clear overlap. This is clear. That's clear. So then I would count this as a wave 3. See, that's where it can get subjective. I mean, notice the first thing I do is I take a look at. Never been called sophisticated? Kai, your name alone is sophisticated. Kai, it's elegant in a simple way. Simple elegance. Okay, so yeah, I agree, right? I agree. Like the wave counts can be subjective at times, right? That's what makes them hard to work with, especially for beginners. And sometimes you have to bend the rules a little bit. There's certain times when you have to make certain exceptions. That comes with experience. But in this case right here, I would certainly count this as a wave 3, this entire structure as a wave 3. And you're likely in wave 4 beginning, right? All you have this little blip up here. And, wave 4 can, it can't overlap wave 1. That's the rule. If it overlaps there, then it's not a wave. Then it cancels out the whole thing. So you basically, Kai, you have anywhere from the top of wave 1, which is 1798, to where it is now, right? 20. So you basically have this range right here to look for that pullback, right? That would be your wave 4 structure in there. At simplest form, a 3-legged 3-wave structure in its simplest form, right? For the flowers. Flowers? Okay. Not sure what you mean by flowers. Maybe that's a way of saying compliments or something. I don't know. I'm slow, Kai. I'm old. I don't know this young man talk. I'm still trying to figure out things like chill. Like I say relax. That's the word I use. Anyway, all right. I'm just being funny. All right, so let's go to the daily time frame. So this is basically your range where you're looking for the pullback. I mean, you could use retracements and look for like a 382 area between 382 and 50 of this move, but you have some structure in that area too, right? You have a little structure in that area. So you could get a pullback into there. That would be ideal for a wave 4 pullback, right? If this thing continues, by the way, then the wave isn't over yet, right? It's possible that can happen as well. Does that make sense? So I would be watching this area in particular, this like range of prices, which are pretty close to. In fact, it's the low of today's candle. The midpoint might be a good spot, right? This midpoint right here may be a good spot to look for a reversal of some kind for a long. Make sense? Which is what? What price is that? 2270. So you could round that. You could be like 2250 to 23. That's not that far away. right? And obviously this thing is doing its own thing because Bitcoin had a pretty significant pullback and this thing is doing its own thing. So the correlation, you don't have to worry about that correlation on Link, at least not right now. All right, cool. So that's Link. Let me know if that makes sense, if that's clear, and I'll take a look at your British bonds over here. All right. Hey, Izzy, how are you? Good to see you. Good to see you. All right. So Kai mentioned the British bond market. Where is it? Hold on. Let me look at that symbol again. UK 10Y BGBP. UK 10Y BGBP. Okay, let's see. Sophisticated, I'm telling you. UK 10Y B, and I guess, is it on here? G. That must be it. Is it on Owanda? Oh yeah, BP. Yeah, that's the symbol. Here dear. Let's take a look at this because we're looking at British bonds. You want to talk about boring? Here dear. Perhaps they'll be represented at the Jackson Hole Symposium, where all the central bankers are going to have a party in Wyoming this week. Here dear. Jackson Hole. What a name, right? All right, so let's go to the weekly. And the British bonds. I'm in the mood for tea suddenly. I'd like to have some tea. Ricky, can you bring me some tea? All right. Yeah, it's Monday, man. All right. So, well, this is not as range bound as the U.S. bond market. Interestingly enough, I mean, look, you have a lower high. That's pretty clear cut lower high. Well, I mean, it's range bound, but it looks a lot more bearish. You have a lower high, okay, which means UK rates are rising. You have this; it's on its low, and if it breaks that low, then I wouldn't want to be taking out any loans in British pounds. So you're at the low though. It doesn't mean it's going to break, but it doesn't look positive, right? I don't see any bullish candles here. I don't see a pin bar, nothing. So this looks like British rates are poised to rise, and especially if these supports break, right? And if you see this low if this low gets tested and broken on the British bonds, then rates are accelerating basically, right? Not good for the UK economy, in my opinion. But they're a mess anyway. Okay, I don't know how they do it over there. They're a mess. They used to control the world at one time. In fact, they say that the UK is the future of the US. So anyway, all right. So that's what the British bonds look like. I would suspect that rates would be rising. I don't know what their monetary policy is like. I don't pay much attention. I know they have a CPI report this week. I saw that on the calendar, but I'm like, I'm not going to even mention that. But I happen to remember. So that's an inflationary report, so that may have an effect on this. But yeah, this certainly does not look good for the British economy. Ricky, you may be prepared for yourself over there. Ricky, you may want to go to the pub so you can forget about this and forget the tea and make sure that you put some whiskey in it. There, dear. All right, I'm sorry. I'm picking on Ricky. I'm sorry. All right. Does that make sense? Well, Kai brings up these British bonds. I wasn't going to talk about these. So, yeah, interesting. All right, cool. All right, you guys. So great questions. I'm glad we have some people participating here. Any other questions? So we can go back. Just out of curiosity, all right, comparing to the these are the US yields, right? Or we go to the ZN1. See, like you can see the US bond market does not look as bearish. This is the weekly time frame, right? The British bond, that chart looked horrible. When I zoom out a bit, yeah, we have a similar situation where we have that lower high consolidation, but those British bonds are they're like on the verge of pushing those lows, where the US are not, right? See that? So clearly the British rates are looks like they're going to go higher. All right, compared. Oh, you run a pub, Erdia. How interesting. So I would imagine, Ricky, you don't serve tea at the pub. Or maybe you do. An Irish tea. No, Irish. Yeah, never mind. You guys aren't Irish. I know. All right. All right, cool. So we got that. That's an interesting comparison. Thanks for bringing that up, Kai. All right. So any other questions, guys? So remember, right? This is now Bitcoin on the weekly time frame. So just kind of a quick recap. Remember, these are the slowest weeks of the year in terms of volume, right? And so you want to be conservative, paper trade, don't trade at all, swing trade. A bunch of you guys mentioned swing trades. Okay, swing trades are okay because you're not getting caught up in the extremely slow volume and the noise, right? So swing trades are still appropriate. It's lower frequency, no problem. Um, so these markets are sitting, they're still sitting on their highs. We don't have any catalysts, any major catalysts on the horizon, right? Unless some kind of surprise catalyst comes out. So I think it's best to just kind of take it easy. If you're going to take some time off, this would be the time to do it. Do homework, do research, paper trade, whatever. Write in your journal, as all the other fake gurus, write stuff in your journal because you'll become a pro trader that way. Stuff like that. And that's pretty much it. You have to understand the seasonality of money, and it affects everything. Bitcoin is part of that group now, right? So we saw Link is not as correlated because Bitcoin has this pullback that is happening right here, and Link you saw it barely flinched, right? So something like that is interesting, where there could be that's clearly relative strength, and if there is some kind of bounce in Bitcoin, even though they're not highly correlated, it still may have some sort of positive effect on something like Link. So those are things you want to pay attention to. Also, now is you sell way more beer than tea. Er dia. Okay, it's good to know. Yes, they like to drink beer in Britain. All right. It's funny. I had no idea you owned a pub. So, yeah, I throw myself off here. Too busy. I'm too busy doing British accents. So yeah, so you guys see where I'm coming from with this, right? Take it easy, go slow. This is a good time to research, do some chart analysis, and identify levels for investing. If over the next few months we have a broader pullback in the S&P and we see a 20% pullback or something like that, be prepared. Have levels in mind. Of course, I'll cover those for you too. But now is a good time to do that sort of thing, right? Just prepare yourself for things and don't get so tied up in this noise because there's a lot of noise and it's just not worth it. It's not worth the effort. You're better off sitting on the beach and playing with yourself than watching a chart because you can't lose money that way. Okay, length shows relativism after years. It's interesting how large caps look strong, suggesting it is not retail. Well, that's interesting, Kai. Yeah, things change. I remember, yeah, Link sucked for a long time. I mean, Ethereum was struggling for a while there, right? And then out of nowhere, Ethereum's like on its almost on all-time highs, whatever. At one point, I think it just missed that all-time high. And forever, Ethereum was just couldn't get out of its own way. So things change, and that's why charting, especially when it comes to investing, charting is not enough. You have to be aware of just some fundamental things, just general. They call them narratives. You have to be aware of the narrative because that's what's driving the market. Remember, markets always they trade on the perception of the future, right? The value now is what people are thinking in the future. I know it's hard to understand, but we trade the future. So if the perception of the future is bullish, they're buying now. Even if that's not true, it doesn't matter. What matters is the perception. And what drives perception? Narratives, right? So just keep an eye on those things. You can't trade on them exactly, but they can serve as like a sort of a backdrop. I primarily look at technical analysis, right? I don't trade on fundamentals, but if it comes to like investing, for example, like sure, I would like to buy some S&Ps, but not doing that right now, right? I'd like to buy some Nasdaq, whatever Qs, and invest in them, but I think these are horrendous prices. And fundamentally, I think we have some problems we have to deal with first, right? Although generally, I believe that the inflation is going to keep them going. You know, things can change, so you have to keep that open mind, but just be aware of certain things. You know, you don't have to read the Wall Street Journal all day, but you just have to kind of stay abreast of certain things. That's all. And but charts, if you don't do that, at least charts can give you levels and charts can give you places to measure risk from and identify some possibilities. Because look, if anything, right, no matter what we know about fundamentals of Bitcoin, this thing has generally been bullish, right? Generally, this trend going back since what, April of a year ago? No, April of this year. Is that April of this year? Yeah, since that bottom of 76K, and this structure has been bullish, right? There's no question. Bitcoin, if we go even further, generally Bitcoin is bullish because it never really breaks any major heavy duty supports, and the fundamentals always come out in a supportive way, right? So anyway, Alex from Romania. Alex, I'm wrapping this thing up, man. I was just saying before, you know, these people come in just as I'm wrapping up and like, hey man, can you show me this one? Romania. I know you're not in Romania right now, but thanks. I'm glad you showed up because now I could say that word. Because when you're not here, I can't say Romania. But when you're here, I can say it. I said it like 3 times since you came in so far. So it's good to see you, Alex. I hope you're enjoying your holiday. I know in the EU, everyone takes a 3-month holiday, except for Ricky because he's got to run his pub. But everyone else, they like off for 3 months. So, oh, you just finished. Okay. Okay, cool. Cool. I hope you enjoyed it. All right. Nice. From the Alps. I remember you told us you were in the Alps. How nice. Beautiful. Right? Very nice. So, yeah. Okay, guys. So, yeah. So Alex, I covered a lot of stuff here today. Yeah. I went through Bitcoin, got the bonds. We even looked at the UK bond market. Thanks to sophisticated Kai here asking about the UK bonds. We took a look at those even. That's how sophisticated we got here today. We got very macro global today. Okay, so you can go back and watch those. Yeah. Wow. They sound nice. I don't know much about the Alps, but I believe they're mountains and that it's cooler up there from what I gather. Sort of like the Jackson Hole Symposium that's going to happen this week in the mountains of Wyoming. All right. Okay. So okay. All right, cool. All right, yeah. So you could just catch up on the stream then. All right, cool. At least someone watches the replay of the stream. So guys, all right. So again, I do this every Monday at 3 p.m. Eastern time, and I'll be back on my schedule. The TradingView article. I'm sorry I hadn't had a chance to write that, but next week I'll be back on. So anyway, there wasn't a whole lot to talk about anyway. All right, so you guys got that. All right, guys. So thank you so much for your participation. Press the like button, subscribe to the channel. It helps and all that other stuff. You know how that goes. All right. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you so much for watching.